Lots to talk about. Seems like every week we've got new sort of news and things. This is a show where we cover all the latest information that you need that you probably won't hear from your guidance counselor or other parents about getting into college, about paying for college, why even bother going to college, test prep, you name it. Before things sort of shook out a couple months ago, the big news was that the ACT was changing formats, and we did a whole webinar on that. Our head tutor, Marissa, did that. We've got some classes coming up. So if anyone's interested in those, just pop a comment in here.
By the way, it was Marissa's birthday over the weekend. So let's wish Marissa, our head tutor, a very happy birthday.
Happy birthday. I didn't realize that. I think we should be doing some sort of promotional test prep discount sale.
In honor of her birthday?
Yeah, I think we did. Okay, so
let's put our heads together.
Yeah, I'll talk to her privately about that and try to convince her that she can make less money for her birthday. So anyway, the news that I wanted to cover today is the ongoing, I don't know if it's the part of the big, beautiful bill or if it's on its own, but the pending changes that are, I would say, extremely undercovered in the media about how student loans, parent loans, grad student loans, how they are going to be dramatically affected, assuming that things get through the Senate and the House the way they are looking, which of course is not a safe assumption. But Pearl, why don't you, Pearl will prepare approximately 400 families worth of financial aid applications every year. So she's on top of all this stuff because there will be some severe changes. We don't know exactly what they're going to be, but walk us through what you know so far.
Yeah, I mean, what's wild is every time I hear any discussion, and granted, I guess it is a really big, beautiful bill, in that in its bigness, there is so much about that, a discussion about other things that are huge, but there has been almost no mention about what I'm about to tell you about, which is that part of the big, beautiful bill that affects college planning, student and parent loans, borrowing, repayment, etc. So I will, to put it the way Andy, when he discusses essays, I will not bury the lead. I will tell you that one of the biggest changes, or the biggest one of the biggest changes that's going to affect everybody, or it's going to be really widespread, is the modifications to the current student loan limits and parent loan limits. Specifically, I'll go from bad to worse. Subsidized loans will be eliminated beginning in July 2026, but will continue to be available. This is important that all of you who are currently enrolled in school, if you have been receiving subsidized loans, you will continue to. So you will be grandfathered in. This is going to affect those who have not yet enrolled in college. Item 2.
So they're being phased out. So just to be clear, subsidized loans where the government pays the interest, and that interest doesn't accrue until 6 months after you graduate, and that's officially being phased out.
Yeah.
Why? Just back up here. Why all these changes? What do you think is
so the reason for all the changes is approximately a quarter of current loan borrowers do not repay their loans. So the government is currently losing about 20 cents on the dollar for every dollar it borrows under this federal student loan program.
Yeah, I saw an estimate that by the end of the summer, the Department of Ed thinks that it might be 10 million borrowers in default.
Yeah, well, that makes sense. That's about a quarter. So, okay, so here are the two huge changes. Here we go. There will be, for every undergraduate student in his or her name, they will have a lifetime borrowing limit under the federal system of $50,000. And a parent will also have a lifetime federal loan limit of $50,000 per child. So basically that means there is $100,000 available of federal money for the student, for one student, for the duration of college.
So how does that compare to what you're seeing parents and kids currently doing?
And if you wanted to just divide that equally between 4 years, that's approximately $25,000 of borrowing each year in total combined between parent and student.
So currently you families.
So currently, let's take a school like Cornell University, which costs, or any of the Ivy Leagues, they're all in an approximately $95,000 all in room, board, tuition, and fees. So if a parent is not getting any need-based financial aid because they don't qualify, they are responsible for paying $95,000. They're only going to be able to borrow about $25,000 unless you're going to front load and borrow everything that's available to you and worry about, I don't know what you're going to do for the other 3 years of college. But basically, if we take it at the $25,000 a year on average, you are going to have a shortfall for that student of approximately $75,000 that you're going to, or $70,000 that you're still going to have to come up with
each year.
Yeah. So what that means is either only very wealthy people who have already saved will be able to do that, or there's going to be a boom, I would predict, potentially in the private lending world.
Yeah, or maybe colleges will cut their costs, which I don't think is going to happen so quickly, but that's that's a possibility.
Well,
maybe
if they lose customers, they're going to have to do something.
Yeah, I don't think the elites is going to have so much of an issue because somewhere around 50% of students at elites are full pay, but it's really not the Harvard or the Cornells. It's really like the Fairfields and the out-of-state schools like University of Texas, Austin, where we've seen our clients, you know, we're not judging, but we've seen our clients borrow $300,000 to send their kids there, and it's not an elite Ivy education. That's not going to happen anymore.
The notion of borrowing, quote, the rest of what you owe is largely over for most.
So what you mean by that is, just to clarify, is that under the current law, which looks like it's changing,
right?
Parent loan allowed you to borrow the whole thing less any aid received annually.
That's correct.
With very little to no credit underwriting.
That's right.
Which is probably why the federal government's losing 19 cents or 20 cents on the dollar.
That's right.
10 million people are in default, and college costs are out of control. Those are all directly related to some people. According to some people, directly related to the ease of borrowing. It's the third-party payer system that has caused colleges to skyrocket.
Well, for starters, there is no debt-to-income analysis in this borrower's application.
Yeah.
So it doesn't matter how leveraged you are already and how much you owe, and even if you have no income.
Yeah.
As long as your credit is not completely in the toilet, and even when it is, there are other options, but we'll save that for another day because it looks like that might be going away. It's unfettered borrowing for this purpose in totality.
Okay.
And that is coming to an end.
Yeah, it seems like it. Seems like it's coming to a screeching halt. So what are some of the other changes that you're keeping an eye on?
So some of the other changes, there's going to be a modification, to the current Pell Grant program calculation, which is going to include assets as part of the SAI Student Aid Index calculation and not just have it rely on income alone, which I think is actually more fair.
Well, fairness is in the eye of the beholder, as is the big beautiful bill. Whether that's beautiful, also in the eye of the beholder, and also
my beautiful was merely a characterization, the way it's been described.
Yes, and a great Twilight Zone episode.
True.
So I think the issue with that Pell Grant, as you're saying, is that it addresses a certain situation, which we've certainly seen a fair amount of, where a self-employed person, for example, who has a very low income because he's got a very good accountant, but also has a couple $100,000 or 7 figures of assets.
Yep.
could qualify for the Pell Grant under the
Right.
current scenario, but now because assets are going to be factored in for the first time, you're saying that they will not qualify. They probably won't qualify for the Pell Grant.
People like that won't, and it will be for who I suppose it was intended for, but people who are actually impoverished.
Yeah, who are in a low income.
Right.
Without
and have other federal benefits. It will likely coincide with the federal benefits already had.
Got it, like the SNAP program and all that.
Mhm.
Okay. Any other changes that you're keeping an eye on?
Okay. Well, this is a pro-business one, pro-small business. The student aid index going forward will not include the asset value of a small business or farm. So that's going back to the way it was only as of a few years ago. That rule was changed about 2 years ago, where they started actually including in the FAFSA a business value.
So one question we get frequently, you may know what I'm talking about already, is so if someone owns real estate in an LLC or some sort of other entity, do you think that is going to now be asset free, not penalized at all, or is there a real estate exemption?
So I think that, well, it's not a real estate exemption if it's held in an LLC and it's a business, then on the FAFSA it should not count at all if they're going to make this change, which is the way it used to be. However, if you are at a school that requires the CSS profile, you will have to go into detail about that specific asset you have.
Okay. So by nature, an LLC is a business, flat out. That's why there's a lot of stuff all over the internet about this special strategy. So it could help you for schools that have that require only the FAFSA, which is the federal form, which requires far less disclosures. But most private schools, mostly aspirational colleges, but not only those, they take this other financial aid application, the CSS profile, which requires a whole lot more disclosure. And you're assuming that that's going to pick up the real estate value at that point and ignore the federal rules reversion.
It may. And another thing to note is returning students may have different rules by which they're judged than when they entered as freshmen. Oftentimes, schools will require the FAFSA and the CSS profile of the incoming freshman, but not necessarily of its returning students. So you may be affected by this perhaps just for 1 year.
Okay, so they're easing us into it. They're grandfathering some people,
right?
But they are
everyone who's currently in school is unaffected by this. The 2026 graduating high school students, they will be affected if all of this passes in their senior year
of college.
So this is what it looks like. But for those of you, from a planning perspective, the income year that you're judged on is 2 years prior to the year you're going to be applying. So these things happen, these changes impact you sooner than you know it, before you know it.
Okay. So let me just reemphasize that, because I don't think I even understood that. So these changes, if they go through in the big, beautiful, bold, audacious bill, then they're not going to affect anyone for a few years.
That's correct.
3 years?
They will not affect anyone currently enrolled in school. So that means and includes the class of 2025 high school graduates who will be beginning their freshman year in fall of 2025. Okay, so they will be unaffected by these changes throughout their college 4 years. However, the current rising class, the senior class, the class of 2026, they will be affected in their senior year of college if all of this passes, as to the changes I've now discussed.
Okay, so that's 2030, because you've got freshman year 26, sophomore year 27, 2029. Yeah. Okay, well, it's very interesting. It's very, very intriguing to see what colleges are going to do, if anything, to respond to this. I think they have to go on massive fundraisers to be able to make up for the shortfall, not only from this potential big, beautiful bill, student loan and parent loan decapitation, but also the full paying international students, which seem pretty
Well,
clear to everyone who has half a brain that they're not going to be as many as of those next year showing up to college. Who knows? I could be wrong, but that seems to be a safe bet at this point.
the other possibility is you may see a lot more action now that it's a forward planning thing. If there's not going to be the availability of funds, or you're limited to do a school like that, full boat 4 years, maybe you go to a community college for 2 years, something much more, or a state school, or CUNY, for example, if you live in New York, something much more cost efficient for the first 2 years before you matriculate, perhaps to a private school that is more expensive, that you're not going to be able to meet the expense otherwise.
Yeah, and a lot of people do that and they don't transfer. So,
Right.
So I think it's another pretty safe bet that it's going to be harder to get into state universities, at least the flagship state universities, if you're an in-state student. Number one, because of the sheer numbers of people who are going to be turning to those, and number two, maybe because those elite ones are going to be looking for more out-of-state tuition students to take the spot, and increase the revenue, so they can afford to pay their bills as colleges. So a lot of potential what ifs. I think the other thing just that should be brought up here, just to round out this discussion, is none of this has anything to do with merit aid. And most private colleges are very, very willing and ready, willing, and able to discount. Currently, the average tuition discount, according to the National Association of Collegiate Business Officers, for private universities is 56.1% off the cost of tuition. So there's a lot of bargaining going on. I think there's going to be even more going on. If you don't qualify for need-based aid anyway, that's not really an issue, because there's more non-need-based aid or merit aid available in the system. So we have plenty of firsthand experience with current clients who make deep 6-figure or even 7-figure incomes, whose kids are receiving 30% off, 35, maybe even 40% off the cost of college. And it's got nothing to do with any of the stuff that Pearl was talking about in terms of the need-based system or federal aid or anything like that.
That's right.
So don't despair if you weren't going to qualify anyway. There's no magic litmus test, by the way, but don't despair. And it's all a game. You have to learn the rules of the game. And Pearl, thanks for sharing those rules.
My pleasure.
Yeah. So what do you think the timing is on when this stuff is going to be voted on this? It's supposed to happen before July 4th, right?
Apparently. I'm not sure. There were certain procedural things that were voted on. I know that the bill is being currently read into the record. I don't know how long that takes. I know it's like 1,000 pages.
They're speed reading like that old commercial, whatever.
Evelyn Woods, but yeah.
Not speed. Remember the guy who had I can't remember what it was, but it was like it was at the pace of a car advertisement disclaimer or something.
Right.
Yeah. But yeah, supposedly they want it done by July 4th, but who knows? Nobody knows.
We will say, and we certainly will report as soon as we know.
All right. So for more information, see our website, lockwoodcollegeprep.com. We're running a whole bunch of webinars and live workshops if you're local, and you can get all that info on our website. Have a great holiday week, everyone.
Happy July 4th. Happy Independence Day.
Yay, America.
Woo!
And we'll be back next week. Bye-bye.